So we're on to some business news. You guys see the stock market freaking absolutely went on a monster tear because of a positive made jobs report there. So it got me thinking a lot, and I was talking to a lot of friends and family. Obviously, they own restaurants and a wide variety of businesses. And I was like, hey, what do you guys think is going on? They're like, hey, well, our restaurants and our businesses have started to start picking back up, especially as we're opening up. And they also mentioned to me, which is true, a lot of business owners are sitting on a lot of cash thanks to the PPP loans. And when we were talking, they were like, hey, we're themselves included, along with a lot of their friends and family members, are like, hey, we're ready to make some investment moves. We're ready to start putting this money back to work. And so a while ago, I made the argument that some people right now are making more money unemployed than they would be employed. And so that might be a deterrent for them to, re-enter the workforce. I think one of the biggest things that we messed up is how quickly the government in general acted in response to this, and that's what's really saved us. So I was on the the gloom and doom, like, oh my God, so many people unemployed, and people are going to be losing their houses and their businesses when it came to the pandemic because of this. But then with PPP coming in, with unemployment benefits kicking in, with the added plus of above normal unemployment benefits kicked in, along with the stimulus check, and quite possibly another stimulus check coming. I mean, what we all did is just gave everybody a 30, 45, 60 day, in a sense, vacation. And I don't see in my mind how some businesses aren't going to recover. And a lot of these businesses were the businesses that were on the edge already, right? So if you think about, Pier 1 was one, and obviously, not that this has happened yet to Bed Bath & Beyond. I still think they're going to be fine. But a retail sector just really got demolished, right? Because they were JCPenney's, they were Hertz. They were on the edge. Well, Hertz could still make it, but they were on the edge of going out. And this thing just kind of, bam, no chance of turning it around or anything like that. But then on the other end, you saw all these businesses boom up. You saw, obviously, Amazon absolutely crushed it in this time. You saw a lot of other companies starting to factor in change and innovation and started to go more online and trying to figure out different things, such as your local automotive dealerships. They started, delivering cars right to your house. You saw this innovation and this spark come. And I read a very interesting quote with one of the pages I follow. They said the biggest thing that's going to come from 2020 isn't, and this is before the riots, obviously, isn't going to be the pandemic, how it destroyed the economy, destroyed whatever. It's going to say how innovative it made our healthcare system, how innovative it made our businesses and our entrepreneurs to step up. And it's shown that America has been resilient. Now, my fear and my skepticism and why I didn't buy into airlines, and I guess I'm an idiot because it all jumped up 50%, but I agree with Buffett, is when you're a real investor, you don't want to take a gamble. You want to execute a trade, or you want to execute into a business you want to be able to make a business decision with a high degree of probability and certainty. Now, to a lot of people, they still are uncertain because we don't know what November is going to look like, or December, or maybe in October, like around that time when the flu season is coming on. Is there going to be a second wave? Is there going to be a second shutdown? So when you're investing with your capital, it took a long time for you to earn that capital. And for you to deploy it all at once, unless you have a lot of money coming in, you're like, screw it, we're going to take a gamble. It's hard to see that thing tank 30, 40% if it goes the opposite way. And that's why I've always will preach to people that are investing, not just people that are wanting to take a day risk trade, whatever, then do what you want, but people that are actually investing, I would highly encourage you want to slowly build your position in, right? So think of American Airlines, for example. It jumped, like 40%, right? And it was at like $10, $11. So let's say you had 10 grand to play with. You would have threw a grand at it. Let's say even before this, when it was at $10, whatever, you threw a grand at it. You say, I'm going to wait every month, and I want to see what this price does. Okay, well, now if it dumped 40% and you turn that grand into $1,400, that's amazing. And you're saying, well, what if I would have put that whole 10 in, I would have made 14? Absolutely, but it could have easily went the other way, right? So now you look at it, and then now you're like, whoa, it jumped up so high. I'm not buying or selling. Let me just see where this kind of goes. So you give it the whole month of June. You see where it's at July. If it bumps up another 10, 20%, you're like, great. Now you made an additional, well, let's just say hypothetically it jumped up 60. So you made $1,600. And now it's July 1. You're like, you know what? I feel comfortable. I'm going to throw another grand at it. Okay, you throw another grand at it. Let's say it goes up again. And then you're like, let me see where this is going to go. So it's August now. Let's see what happens in September around the earnings, September, October around the earnings, and see which direction the company's going to go. If it starts going down, hey, you're not worried because your original investment is still way protected. If it gets cut in 50% and now you lost 20% of your original investment, now you could say, well, I still have $8,000 cash. I still believe in this company. Okay, let me throw another grand at it. Then if it goes down another 20% from there, you put another grand in it. You dollar cost average, you bring it down and you build that position where ultimately you're going to be the winner because you're still going to get it at an average price that was much lower. And along the way, you're kind of calculating your risk and seeing which way it's going to go, right? So that's why I'll always encourage that never to go head first and strong into it. But these are one of the fears that I have is, I went out and ate at restaurants and it seemed just fine. It seems people aren't care. They're going to brush it off. But the skepticism of investors, some investors out there now are just kind of like are we going to get back to normal? How is this going to impact things? How is this going to impact earnings? Well, a lot of the other smart investors they're going piling in, they don't, and other investors thinking we're going straight to the moon. And that sometimes makes me scared too, because remember, Buffett the wise, right? Be fearful when others are greedy, and then be greedy when others are fearful. And right now others are being greedy, and that should make you a little bit fearful of what to come. And the reason why we're not seeing a Great Depression like people thought we were going to see, like, back in the 30s, like what happened, is because we're no longer also pegged to the gold standard. Back then, the government or the Federal Reserve couldn't just print money, right? There was restrictions, there was limitations on it. Today, however, we're able to print it, and that's exactly what you see happen. We kickstarted the economy with trillions of dollars put into it. And back then, you weren't able to do that. And if you remember from history, it took the New Deal in order for us to really get kickstarted. It took government to spend and add those unemployment benefits and add those this huge expansion of money in order for it to kickstart again. Well, we did that now with just by doing stimulus and by doing a few bailouts. And so this whole economy is built on the fact that we are hoping that consumer behavior returns to normal. And honestly, guys, the scary part about it is nobody's going to know what consumer behavior is going to be 2 to 3 months from now. We're making huge guesstimates, and we do have some good indications. Like Expedia says there's pent-up demand for travel, and so that's there. Restaurant chains and stuff like that, as they're opening up across California, you're seeing still lines at the door, even though they can only hold half. That's a good sign there too. But the only thing that's really going to deter us is going to be the lack of faith of going back out there when we fully open and say, hey, go ahead and go, and seeing what we can and can't spend. And I don't know if I mentioned this earlier or not, but the enthusiasm of the truth of the matter is the enthusiasm is going to be is this is probably going to end up being the best thing for pharmaceuticals, because it's going to push them to be more innovative and push us to be more have a little bit more of a forefront when more other diseases come on, and be in a better position to handle it. And more than anything, we cannot let this be a one-off as a society as a whole. We have to put a plan in place that says, okay, not if, but when this happens again, and when this is more serious and it's actually threatening the lives of people that are younger, this is what we need to do, which is XYZ. Vote on it, get it passed, so we're not caught off guard. That's one of the things that really shocked us, is because it really did caught us off guard. Now, if we have these plans in place and set up, and the market realizes that, including small businesses realize that, we can start evaluating risk at a better level. And then so when something like this does happen again, which it will, we could say, okay, these are the steps, this is what's going to happen. And you're not going to see a huge 30% drop. You're probably going to see like a 10, 15% sell-off, because you'll know, oh, these people are going to be able to stay open. These people are going to stay alive. Oh, these sectors are going to take a hit, So, I mean, hopefully, I think we're all going to learn from this experience, and we'll grow from this experience. So what to look forward to in this next week, for me, it's going to be is, can we maintain? Or are we going to get destroyed? Can we maintain this momentum and push through it? And as we see California's opening up next week, still keeping a close eyes, on those cases and those numbers to see if we have a pullback, or is it going to be just full steam ahead, let it go, let's see what happens. So that's what really I'm looking forward to right now. and seeing, and I'm vested in right now. So, but I'm letting my position ride because the company I'm in, I believe in it, and we'll see. And I'm sure a lot of people that are buying stock into the company, hopefully they're not just trying to make a quick buck, and they're actually believing in the company's long end and prospects, right? So for me, the biggest thing is going to be is how does California open? What are going to be the impacts on the cases? Are they going to dramatically spike? Are they going to mellow out? Are we going to see a decrease? And what is going to be the consumer behavior, especially in the second quarter? And hey, if you kept your money on the sidelines, you're not dumb. Do not feel bad. You're extremely smart for doing that. And what you need to wait for is this next wave of earnings, which is, well, April, May, June, July, end of July, beginning of August. Once you see that wave of earnings come in, you start seeing companies give better guidance because everyone will have better guidelines, how they're opening, how they're growing. Then you can make a smart determination of deploying your capital. So don't feel bad if your buddy's texting you saying, hey, I made 40% in a day. You're dumb for not investing. Hey, remember, guys, this game isn't the number one thing you're doing here. It's not always to make money. Your number one goal is to protect your money. So don't feel bad if you missed this wave. That's such short-sighted stuff. You should feel really good because now you have all your capital and you're being able to see a way better picture. So when you do pick your stock or when you do pick your business, or you do pick your rental, you know you're going to hit it out of the park because you have a higher degree of certainty and way more information to make a more informed decision. So, hey guys, I hope this video helped a little bit, or at least give you perspective on what to look forward to. If you guys could help me by sharing this with one friend as a DM, that'd be great. And if you have any questions, of course, DM me or shoot a comment.